planning for salaried employees. Before discussing the tax planning for salaried employees, we will discuss, or I will let you know how to process the salary for each and every employee, what are all the salary components, and what are all the 4 types of salary calculation. First thing, there are 4 concepts of salary calculation. The first concept is, you think yourself as a payroll executive. So as a payroll executive, you are head of the department. Your head of the department has given you gross salary of the employee. How will you calculate the CTC if gross salary is given to you? Is the first concept. Second concept is, if CTC is given to you, how will you calculate the gross salary? The third concept is, if gross salary is given along with other benefits like car reimbursement, travel reimbursement, training and development, insurance. So these are all the other benefits. So if gross salary is given along with the other benefits, how will you calculate the CTC? If CTC is given along with other benefits, how will you calculate the gross salary and net salary? So these are all the 4 concepts in salary processing. So first we will see the first concept. First concept, if gross salary is given to you, how you have to calculate the CTC and the net salary. Okay. So net salary means is the take-home salary. According to the attendance of the employee, you will be running the salary of the employee, and what the employee is finally taking home to the what the employee has finally taking home as salary. First thing is, IT executive has joined a company at Mumbai, Maharashtra. HR has offered him a gross of 30,000 rupees. 30,000 per month. Per month, the employee gross is 30,000 rupees. You have to calculate the CTC and net salary. Now calculate the CTC. The gross is fixed to 30,000. The first is, when the gross is given to you, you have to check. The first thing you have to check, what is the city you are, or what is the state you are, not state, what is the city you are living, or what is the city where the organization is located. Say for example, if the organization is located in metro cities, that is Chennai, Mumbai, Goa, Kolkata, Delhi, these are all the metro cities. If your organization is located in metro cities means, then what you have to do, you have to calculate 50%. If your organization is located in non-metro cities means, you have to calculate 40%. First, salary components. First component of the salary is DNS plus, basic plus DNS allowances. Most of the organization, they will give basic along with the DNS allowances. Basic salary means the salary the employee is earning for their contribution to the organization. So contribution of work to the employer. The remuneration the employee is receiving for the contribution of work to the employer. That is the basic salary. DNS allowances is the allowances given for the employee by the employer for their work. See, basic salary, it is the remuneration earned by the employee. DNS allowance is something, the allowance given by the employer to employee. Okay. Understood what is the difference? Basic salary is something the employee is earning out of their work. DNS allowances is something the employer is giving for their work. Employees' work. Employer is giving for employees' work. That is the DNS allowances. DNS allowance is simply means it is like a pocket money for the it is like a pocket money the parents is given to the children, right? So like that, employer is giving to employee. That is the dearness allowances. So most of the organization, basic plus dearness allowances will be given as a same component. Some organization, basic will be given as a separate component and dearness allowance is given as a separate component. Next, house rent allowances. House rent allowances, simply house rent allowances in short term we can call as HRA. HRA is given to the employees who are living in a rented house, or this basic plus DA, basic and dearness allowances, house rent allowances. These are all the salary components recommended by the income tax department of India. Okay, so every organization, they will give this compulsory, they will give this component, basic, dearness allowances and HRA. So these are all these three is the salary component recommended by income tax department. Next is medical allowances, transport allowances. Medical allowances given for medical purpose. Transport allowance is given for employees transport for commuting their resident from office. For that they are giving transport. Special allowance is something the employer, special allowance is something given by the employer to match with the gross salary. Okay, so these are all this is a standard format. This basic plus DA, HRA, medical allowances, transport allowances, special allowances, and gross. This is the standard format which is recommended by government. Okay, so if the employer, if they want, they can change this format. Instead of giving this medical allowances, they can give conveyance allowances. Instead of giving this transport allowances, they can give telephone allowances. So according to their conveniences, they can change the components, but no employer will change this basic plus DA and HRA, because these three is the mandatory component that the government has advised all the organization to give the employees, because in this three only all the taxes will be calculated. Okay, so basic plus DA is mandatory for calculating PF. Basic plus DA is mandatory for calculating gratuity. Basic plus DA is mandatory for calculating bonus. Basic plus DA is mandatory for calculating income tax. So HRA is also mandatory for calculating the income tax. So these three components is very mandatory that every organization has to give to all their employees. But other components, they can change according to their choices. Medical allowances, transport allowances, special allowances, they can change according to their. But special allowances, no employers will change, because special allowances, income tax will be calculated. Medical allowances, transport allowances, they can change. They can, instead of medical allowances, they can give uniform allowances. Instead of transport allowances, they can give washing allowances. They can give according to their choice. But this basic DA, HRA, no employer should change, because these are all the basic components where everything will be calculated. Every statutories will be calculated. Understand? Okay. When gross is given, how to calculate the salary component? First thing is you have to calculate the basic plus DA. How you can calculate the basic plus DA? From the gross. That is 30,000 is your gross. 30,000 is your gross. What you have to do? You have to check whether the organization is in, whether the employee is working in, not organization, whether the employee is working in metro city or non-metro city. If the employee is working in metro city means, then you have to calculate 50% of gross as basic plus DA. That is 50% of gross. 30,000 is your gross. 30,000 should be given as basic plus DA. That is 15,000. Again, 50% of basic plus DA should be given as HRA. See, 50% of gross should be given as basic plus DA. 50% of basic plus DA should be given as HRA. Understand? If the employee is working in metro city, if the employee is working in non-metro city means, then 40% of gross should be given as basic plus DA, and 40% of basic plus DA should be given as HRA. Now, medical allowances. For medical allowances, the government has recommended 15,000 rupees as tax exemption. So 15,000 rupees per annum as tax exemption. So if the employer is paying 15,000 rupees as medical allowances means, then the employee need not to pay any tax for medical allowances. If the employer is giving more than 15,000 per annum as medical allowances, then the employee has to pay tax on them. Say for example, if the employer has given the medical allowances rupees 20,000. Here the government has given 15,000 as exemption. 15,000 per annum as exemption for medical allowances. Okay, but if the employer is paying 20,000 per annum as medical allowances for a particular employee means, then the employee has to do, for 15,000 the employee need not to pay any tax. 20,000 minus 15,000 is remaining balance is 5,000. So for 5,000 he has to pay tax. Okay, so this is the concept. The concept of medical allowances is 15,000 rupees is the salary exemption for medical allowances. 15,000 divided by 12, it's 1,250. 15,000 divided by 12 is 1,250. So per month, the employer can give 1,250 as medical allowances in order to make the employee escape from paying the tax. So 15,000 divided by 12 is 1,250. Okay, so an employer can give up to 1,250 per month as medical allowances to make the employee not to pay tax on medical allowances. Understood? So 1,250. If the employer is giving a component, medical allowances as a component means, simply or blindly you can put the amount as 1,250, because up to 1,250 per month only, per month the government has given the tax exemption. So blindly you can put 1,250 as medical allowances. Next is transport allowances. Transport allowances, why they are giving these allowances is given to the employee for their commuting from their resident to office premises. So for that the government has given 1,600 per month as tax exemption amount. So 1,600 into 12 is 19,200. So up to 19,200 per annum, the government has given tax exemption amount for transport allowances. So if the employer is giving transport allowances as a component in the employee salary means, you can blindly put 1,600 per month, because up to 1,600 only the employee can enjoy tax exemption for transport allowances. Next, special allowances. How you calculate the special allowances? You know the formula for special allowances is gross minus all the salary component. All the salary component includes basic plus DA plus HRA, MA and TA. So gross minus all the salary component is the special allowances. It is a formula for special allowances. So what is here? What is the gross? 30,000. 30,000 minus basic plus DA plus HRA plus medical allowances plus transport allowances. 4,650 is the special allowances. Now you can verify whether your split ups for various components is right or wrong. So you have to sum up all the components, basic plus DA, from basic plus DA to till special allowances. If you get 30,000, then your split up is right. Yes. If you are getting wrong answer means then somewhere you have did wrong. You have did mistake. There is no formula for transport allowances. The government of India has given tax exemption up to 19,200 rupees for transport allowances. Okay, 19,200 rupees per annum as transport allowances and 1,600 rupees as 1,600 rupees per month as transport allowances. So you can blindly put 1,600 for all the employees who are eligible for transport allowances. Or if the organization is given transport allowances as a separate component means, you can give 1,600 as the amount because it is the salary, it is the tax exemption. So up to 1,600 only you can give. You can give more than 1,600. You can give, but the employee has to pay tax. Okay. Say for example, if you are giving 2,000 rupees as a transport allowances means you can give 2,000 rupees, but 400 rupees for remaining 400 rupees. That is 2,000 minus 1,600 is 400 rupees. For balance 4,000 rupees, employee has to pay tax. In order to make the employee not to pay tax, then the employer has given 1,600 as a amount for transport allowances because the government of India has given as recommended 1,600 rupees as tax exemption. So the employee need not to pay tax for this transport allowances if the employee is getting up to 1,600 per month and 19,200 per annum. If they receive 19,200 per annum means they need not to pay any tax amount for transport allowances. Is it clear? There is a formula for special allowances. Special allowances, gross minus all salary component. All salary component is basic plus DA, HRA, medical allowances, transport allowance is a salary component. Special allowance is also the salary component, but to find the special allowances, you have to minus this salary component from gross salary. So gross here. So 30,000 minus basic plus DA, HRA, medical allowances, transport allowances, you will get 4,650 as special allowances. So to find your gross or to find whether your split up is right or wrong, you have to sum up all the salary component. You have to sum up all the salary component. If you get the gross salary, then your answer is right. If you don't get the gross salary means somewhere you did mistake. Okay, so to verify that, you can sum up all the salary component to get the gross. Next, this benefits. What are all the benefits? Benefits are contributions. We can say benefits in the point of view of employee and contribution in the point of view of employer. Contribution means the employer is giving contribution or the employer is providing their share towards the employee account is called contribution. Okay. Benefits means the employee is getting benefit out of employer contribution. That is called benefits. So ESI, PAF, gratuity is the benefit for employee. But the same components are contribution for employers. So employer, they are providing some share. They are providing some amount of money as a share to employees' benefit. That is called contribution. Okay, in the point of view of employee, that is the benefit the employee is enjoying. But in the point of view of employer, it is the contribution. Okay, so the employee EPF, that is Provident Fund, employer share is 12% of basic plus DA. Here, what is the basic plus DA? 15,000. So 15,000 into 12%, 1,800. ESAC is 0 because, as we discussed, the eligibility for ESA is employee should get less than or equal to 21,000 as gross salary. Remember, guys? Did you remember? We have discussed, I think, in the last session. In the last session, we have discussed that the eligibility to get ESAC benefit is the employee should get less than or equal to 21,000 as gross salary. Here, the employee has crossed 21,000 because the gross salary is 30,000, which is more than 21,000. So ESAC is 0 for that particular employee. Next, gratuity. What is the formula for gratuity? I didn't tell you the formula for gratuity. For calculating the CTC, the formula for gratuity is 4.81% into basic plus DA. Okay, so we have discussed the formula for gratuity for settlement. When the employee retires or resigns from the organization, the formula for gratuity is last drawn salary divided by 26 into 15 into number of years of services, completed services. That is the formula for calculating the full and final settlement. But the formula for gratuity contribution is 4.81% into basic plus DA of the particular employee. Okay, so the 4.81% of 15,000 is 722. Now, what is the total contribution? You have to sum up all the contribution area. That is EPF, ESI, and gratuity. So this is the total contribution. Here I will say the contribution, not the benefit. Contribution. If you are calculating employee share, employer share means then it is called as contribution. If you are calculating employee share means it is called as benefit. So contribution is, total contribution is 2,522. CTC. CTC, to calculate CTC, there is a formula. To calculate CTC, gross plus total contribution. Gross plus total contribution is the CTC amount. So, what is the gross here? 30,000. 30,000 plus total contribution is CTC. Understood? If you want annual salary means the same component, per month component should be divided, it should be multiplied by 12. It should be multiplied by 12. So, if the monthly CTC is 32,522 means, then the annual CTC is 3,90,000 528. Okay. Now, what is the benefit amount? Benefit amount or deduction. Benefit or deduction. We can call as benefit or deduction. Okay, we will call deduction amount. So deduction amount is the employee is giving some share towards their benefits. So that share will be deducted from the employee per month salary. Later they can enjoy the benefit. If they want, they can withdraw the PF money or ESA. They can enjoy they can enjoy the ESA money as a medical benefit, and not gratuity. Gratuity, employer should give contribution. No employee will give contribution for gratuity. Professional tax. Professional tax is one of the statutory due for employees. So the same thing. Same thing. Gross. That is 50% of 30,000 is 15,000. HRA 50% of 50% of basic plus DA is HRA. Medical allowance 1,250. Transport 1,600. Gratuity gross minus salary component, basic plus DA, HRA, MA, and TA. Sorry. And TA. So gross sum of all the salary component. Now EPF. EPF of employee share. Same thing, 12% of 15,000 basic plus DA is PF of employee share. ESA 0. Professional tax. Professional tax, I will let you know how to calculate the professional tax later. Okay. Now we can deduct 200 rupees as professional tax. So 200 rupees. So deduction is sum of all the deductions. 1,800, 0, 200. So you have to add all the thing, 2,000 rupees. So net salary, for net salary here there is a formula. Net salary gross minus deduction is the net salary or take home salary. Take home salary equals to, or how to calculate take home salary means gross minus deduction. CTC means gross plus contribution. Net salary means gross minus deduction. So here what is the gross? 30,000 minus deduction is 2,000. So 28,000 is the take home salary of that particular employee. Understood, guys? Now, if the employee has worked only for 26 days out of 30 working days, we will we will consider 30 is the working days. No organization there is 30 working days, but we will consider 30 is a working days, or we will consider 24 days. So out of 26 days, the employee has worked for 24 days only. So in a calendar month, 30 is the calendar days. Out of 30 days, 26 is the working days. You deduct all the Saturday and Sunday. No, not Saturday and Sunday, only Sunday. So if you deduct only Sunday, 26 is the working days. So out of 26 working days, the employee has worked only for 24 days. Then how will you calculate? Then how will you calculate the salary? That is salary for the month divided by 26 into 24. Because if you divide the salary or if you divide the basic plus DA by 26, you will get 1 day basic plus DA into 24. Into 24 means 24 working days. So this is the amount, 13,846. Likewise, you have to do for other components. The same thing, like 7,500 into, divided by 26 into 24. The same formula you have to apply for everything, every component. Now, for 26 days, the employee salary is 15,000. For 24 days, the employee salary is 13,008. For 26 days, the employee take home is 28,000. For 24 days, the employee's take home is 25,846 because the employee has worked only for 24 days. If the employee has given full attendance means, then the employee would have earned 28,000 as the take home salary. Understand, guys? Now I want you to calculate if the employee is working in non-metro city means what is the split up salary components? What is the amount for all the salary components? Do only the contribution part. That is, do only the CTC calculation, not the take-home calculation. Do only the CTC calculation. If the employee works in non-metro city, then you have to calculate 40%, right? So if you calculate 40% mean what would be the CTC? Yes, you can verify their answers. CTC is 32,017 if you calculate for non-metro city. You understand the concept?